Every is arguing that the United States makes the dollar less fungible. Perhaps the United States can use the stablecoin concept to direct capital flows to its advantage. That was a very interesting and illuminating episode for me. And while I can't really speak on should the United States be pursuing capital controls as they're labeled capital controls today, that doesn't change the fact that trying to direct new forms of capital out into the world and then have them circulate it and potentially have them send it back to the United States for some use, and we guardrail that type of capital flow or advantage it in some way, it's really down the line. That's why, my idea is quite speculative and long-term in thinking, but I think if the United States can entertain exporting stablecoins into the global sphere, it's a positive thing for the country for these two reasons: one, governance, and two, profits.
The opinions expressed in this podcast do not necessarily reflect the opinion of Arcos Global Advisors or its advisors. The mention of different asset types or securities do not constitute a recommendation for our clients. If you have any questions about the content of this podcast, please contact your advisor. Welcome to Navigating Bitcoin's Noise, the show where we cut through the clutter and bring you the clearest insights on Bitcoin. I'm your host, Kane McGukin, and today I'm joined by Nik Bhatia, author of Layered Money and visiting fellow at Bitcoin Policy Institute. In this conversation, we break down Nik's landmark paper on stablecoins and statecraft and why the Genius Act may be one of the most strategically important pieces of legislation in decades. We get into how the Eurodollar system quietly exported dollar governments offshore, how stablecoins are designed to bring it back, and why the end of China's deflationary unsystem is forcing America's hand. We ask the question that matters most: are stablecoins just a fintech product, or are they America's most powerful tool for the next money layer? If you're tired of hype and want a first principles breakdown of how dollar dominance actually works and what the US is building to protect it, this episode is for you. So sit back, relax, and let's get started. All right, thanks everybody for joining today. I have with me Nik Bhatia. Excited to have him back on, but particularly wanted to get on with Nik and just kind of talk through his recent Bitcoin Policy Institute paper on stablecoins as statecraft, and just kind of talk about that and see what Nik learned and what your outlook is for Bitcoin, crypto, financial markets, and all things as kind of we enter this period in financial history.
Kane, great to be back, my friend. How are you?
Good. Glad to have you back.
So, stable coins they should be thought of as a tool for the government. I think that is that's the motive right now at the margin. When you think about the Genius Act, it's a legislation, right? And so that means it's of importance to the government. And I think that's really where you can start with stable coins. And if you see it through that lens, then it becomes less about the private sector usage of it or the battle with the banks, which is at the forefront of the Clarity Act. So if you want to start there, I think that's a good place.
Yeah, I think a tool perspective or in that light is important. I mean, if you think about money and what it's supposed to be at base, money is a tool. And if we use it correctly, it helps us grow. If we use it incorrectly, we see things like we've kind of seen in the last decade or so. So maybe walk the listener through what were the big kind of things you learned in doing this deep dive for the paper, and then what was also the things that you learned going to Washington and talking with policymakers on that front, and then we'll kind of dive into some other things.
Sure. Well, what I learned is what motivated the paper, which is that they want to use stable coins to their advantage. That's the key. They want to use stable coins to their advantage. And the conversations I had revolved around that. Like, how can we use them? And I think that that was the motivation of the paper. So how can we use them? And what I discovered in the research is that what stable coins do is they represent the dollar, which has a history of commodity linkage. However, it is much more a banking construct and mostly has been, because the origin of, or I should say, the history of United States currency is heavily mixed in coinage having precious metal content, paper currency having state origin and or backing, and then private currency issuance. So like the way that we think about deposits today, it's private sector money, but has FDIC backing. So it's like a private public money of sorts. And it's fungible with other bank money, and it's fungible with central bank money, paper money. And so it's a very fungible type of dollar. But going back to pre-1864 US monetary system, it was not that way at all. The fungibility was, today we would have think of it as a complete disaster. It'd be like if everyone was using a different altcoin in some ways, not all. That's a little harsh because they were all dollar denominated. But
there was that dislocation of too many versions trying to do the same, to compete to do the same thing, which created regional issues and whatnot, or potential for, more grift than kind of what we see now.
And you can, and it's a great way to summarize it, Kane, but I would also, even just to simplify it, it can be good or bad. That's one, and it was both. And it can be risky or not. And that's also, a separate issue. Then the societal issue might be different. And the benefits that accrue to whom, right? To the people, to the banks, to national objectives. So each era has its own fundamentals. But the truth is that, yes, the United States moved from that system to a national currency system, and 1864, if I'm not mistaken. So that system really took the dollar into its current form, but in its current form, it started to evolve with the Eurodollar system, and then accelerated post gold window closure, because then the commodity linkage broke and it could accelerate. The petrodollar system is its own add-on dimension. And you have paper money circulating around the world, and basically half of the large currency notes are outside of the country.
Mm-hmm.
So there's a very real and present demand for dollars outside of the United States. But if you forget domestic and international for a second, you forget that distinction. The demand for dollars to transact in the global economy and to be a participant in the global economy and a participant in asset markets, it's almost unlimited relative to the amount of manpower on the planet. And you don't see money rushing out of the dollar system into the Chinese system. you see you see Chinese currency adoption through trade at the margin, which is funny enough how you get stable coins into the system is through trade at the margin.
So is that, to just kind of pause right there, one of the conundrums of the Eurodollar system? So for those that maybe don't know what that is or aren't familiar, it's just where dollars go out into the international system, those banks relend them. So effectively puts pressure on the US to reprint more dollars that then, as you mentioned, I think it's $100 bill or so, is one of the highest, or close to 50% is outside the US. So if we need more, we have to issue them, then those just get relent again. And so from a political perspective, is there another tool in the new technology tool shed that we can go to and sort of solve this to kind of rebalance that system, or create a better system while maintaining the dominance and seniority of what arguably is the widest, vastest monetary network out there, which is US dollars?
Yes, the way to it's really address the perceived imbalance, I think, and that's why the idea itself is a little, I wouldn't say it's obscure, and I wouldn't say it's far-fetched either. It's just very long-term in its thinking. And so the reason that my idea is, quite long-term in its thinking is that on the margin, for a global dollar system to operate completely outside of the governance of the United States is one thing. And then to whom the profits accrue to intermediate that system is relevant. And on both of those issues, on the first issue, I do believe the United States should have more of a role in the governance of the global dollar system than it currently has today. Full stop. So it should increase. And then on the profit side, I believe that American firms should have an increased ability relative to today to profit from the global dollar system, which is intermediated by domestic and international financial institutions. And so at the margin, I think that can be addressed. So it really is a pure United States forward way of thinking that the US dollar private stablecoin issued by regulated US financial institutions domiciling US Treasuries in the United States so as to have the Treasuries not leave the country, which is, by the way, maybe the most important of it all.
Yeah.
It is, perhaps the most important of it all in the capital war, which I know you're a student of this capital war, which it's centuries old, and
Right.
And where maybe the most challenging intellectual excitement happens in all of this. So I do want to mention that. But this architecture of getting a stable coin out into the world instead of a global banking dollar, which the United States doesn't have good governance over, and the profits don't accrue to US firms to the extent that they could, and I would argue that they should. And that's where stable coins have a role. That is what I learned while writing the paper. And Kane, the point here from the United States perspective, and this is my big light bulb of it all, is that I'm writing this paper after writing 2 books that revolve around the Eurodollar system, and months after the Genius Act is passed. And I didn't see it like this until I wrote the paper, which means that the US policymakers whether or not they're in the Senate, Treasury, Fed, intelligence, or deeper. They already knew this. They absolutely knew this. They knew every part of this story. I just am bringing it to the front. But there is no doubt that stablecoins, in their Genius Act intent, is designed for specifically this.
And that makes sense, right? I mean, if you're the best nation on earth, you have to have pretty deep tentacles, right? And you have to understand those flows in ways that the rest of us, the average person, don't, because you see them behind the scenes. You see directly what the problem is, while you may or may not be able to do anything in the moment. And sometimes it's a technological thing, and sometimes it's the cat and mouse. Banks and robbers, right? They're always going to kind of coexist. I think so. That does make sense. It's actually better to hear, rather than if you stay in Bitcoin culture, it's like, oh, the bankers don't know what they're doing, the government doesn't know what they're doing, and money is failing because of it, right? And I think sometimes you could point to that and say, okay, well, maybe here, but the reality is there's a much longer play, as you kind of mentioned, because you have to think in decades and centuries to create a lasting monetary system, regardless of all the other fighting and wars and whatnot. The best thing for people in general is to have a medium of exchange that works across borders, intra borders, and across town. Otherwise, you get that kind of wildcat banking scenario that you laid out, which was kind of 1830s, 1860s, I think, U.S., where there's a big difference between the winners and losers. I think I'll ask this question to you, but if you simplify this down, so for someone that's listening that maybe lightly understands Eurodollars or not, effectively in that system, which went on since the 50s or so, the way I think about it is, could it be sort of similar to, I'm going to give you, Nick, my credit card, and you go spend at will. I have no repercussion on that. I mean, I gave it to you, right? But once you put those dollars out in the global world, once they leave the borders of the US and they go in these other banks, it's effectively like those banks having access to run up credit card bills with untapped limits on, the Fed. Obviously, we fight that with swap lines and other ways, but generally speaking. And so the stable coins are, because of the technology, because of the instantaneous settlement, you can keep that dollar functionality, but the underlying component of it, the Treasury, which you mentioned, stays domiciled, stays within some U.S. regulated institution where they do have the right to say, hey, give me the credit card back. And to the profits point, what comes to mind that you made, it's like if you work in a company and you're doing all this travel, and so you're running up all these expenses, but the profit goes, or sorry, the rewards go to the company instead of the end users. Now they gave you the card, they gave you, and they paid for it, so it makes sense. But there's a lot of benefit that accrues to having 10,000, 20,000 employees using a credit system and the rewards going somewhere else.
Yes, the credit tab is a good analogy. And here's what I'll even say about that. Perhaps, Kane, the worst of the worst in terms of Eurodollar growth is behind us. And perhaps the United States, over the past several years, since SOFR targeted LIBOR and then ultimately buried it, that this has been reversing in a good way for the US, to the point where maybe even the self-governing limits on how many dollars that you yourselves can circulate in excess of what we have,
Mm-hmm.
maybe it's more in line with the market. and this is me just being really devil's advocate, because my goodness, that's all I can do at this point is to keep trying to see each side to the extreme and spec it out. So what if all of that is going well? What if all of it is going in the correct direction? And still, this is a tool that domiciles the treasury onshore and is more geostrategic than anything. And it really is also the success of all of this. And it was a little bit in the ideas that I put forth when I was in Washington, but that you got to get these things circulating. And how do you do that? So if it is to work, it has to be the thing that moves around, and that people mostly or only want that type of instrument. I want the Genius Act one. Send me that one.
Or like with Tether's two versions. So you have the AT, which effectively, and I could be wrong here, you can correct me, would be
USDT. Yes,
would be a SOFR version, and the USDT would be a Eurodollar version.
Right. And so here's my opinion on Tether, which is, specifically mine. And I should say the paper was written with the Bitcoin Policy Institute. They commissioned me to write the paper. And I'm now visiting fellow at BPI, which is really an incredible journey for me to go on, is to be involved in some of these discussions and just putting my ideas forth, because that's all they are just they're my ideas. And BPI is a think tank that people, some people were surprised. Why is this dollar stablecoin idea coming from BPI? Well, BPI, while it's a Bitcoin Policy Institute, has objectives that are very American in nature. And the stablecoin idea accrues to Bitcoin indirectly and at certain margins, but has nothing to do with this idea. So the word Bitcoin didn't appear in the paper, Kane.
Right.
And that I think, that's something that needs to be discussed also, because this paper, it is meant to explore a world in which to go back to Tether is part of stablecoin history. In fact, it's at the foundation of stablecoin history in general, which means that stablecoins are themselves a market phenomenon, which is very important. The degree to which this idea works directly challenges USDT's present day dominance of global stablecoin flows. I readily admit that. And it's not, if you read the paper and if you go into my argument, what I'm suggesting is that the US use Genius Act stablecoins to its advantage, try to proliferate them and enter the market. What I don't say is, hey, Tether is an enemy. Let's go after Tether, make them replace USDT with USAT, or if they don't, drive people from their USDT transactions into Genius Act coins, choke them off, and burn Tether to the ground. My idea is absolutely not that, because that's the same destructive mentality as burn down the current Eurodollar system too, which I do not suggest we do. You get it in the circulation through trade adoption, through bilateral negotiation, through strong relationships, and through lead by example of a good monetary instrument.
Well, that's the story of capital flows, capital wars, which is about the liquidity flows, and really, to your point, not mentioning Bitcoin, talking about stable coins. The solution is how to grease that wheel of dollars, which is on the back of treasuries, You have a lot of buyers stepping away, so you have to create buyers in some capacity to do that funding, which the issue is, what about the rate situation and the debt? And so you have a mechanism that you walk through, could push down rates, could bring SOFR rates down, plus bring back control over a system that's out of control. To be honest, nobody really knows what the value is. I think you mentioned, I think I've seen other places, 15, 16 trillion might be the Eurodollar market. But the leverage is so opaque. And so this way gives you, in my opinion, a way to do all that, create some transparency where you can see through and trace and track, not in a level of a CBDC type trace and track, but you can figure out what your leverage is, because that's really what brings about crisis, brings down systems, is the inability to do that. And I think even more importantly is kind of the Michael Every's points about how the real problem that reserve currencies face is Triffin's dilemma. The U.S. is kind of bumping up against that. And I'll let you kind of walk through the insight, but in the pages 30 on or so, where you walk through, hey, if you do a transaction in the traditional Eurodollar system, here's the amount of the multiplier that gets put through the system. If you do it in a stablecoin system, the Treasuries stay on the books, the stablecoins go out. You don't have to effectively burn the Treasuries unless somebody folds or you had a lot of people return their stablecoins, which is not generally likely, because the point of having currency to be exchanged for goods and services is that it hops from one peer to another or one corporate node to another. So I think that, to me, is the most interesting part, least understood from a, here we are in 2025, 26. Oh, these are just tokens that international individuals that don't really need dollars can get access to it. But I think from that perspective, you laid out a clear path for why it settles, probably the biggest issue that we have.
It's an important point, because what do you do if you're a business that believes in yourself, but is up against some debt limits and some cash flow issues? You get a bridge loan until you make more money, until you can figure out how to make more money. So stable coins can be a bridge loan until the US goes to higher nominal GDP. And if you introduce stable coins into the circulation, you get that reduced multiplier and you get the built-in US Treasury security bid, which the United States has quite a few outstanding, and they're rolling all the time. And like you said, if the world trade doesn't fold on top of what you build out in stable coins, then you have an embedded force, or what we call in equities today a passive bid. And the passive bid in equities, for people that to make them see the example in a couple different ways. A passive bid for equities means that everyone in the country earns a paycheck every 2 weeks. And if the savings rate is above zero, then some of the money that people earn gets put into 401k and therefore the broad stock market, which means that every month that goes by that the economy is doing decent, you have money flowing into the stock market. Kane and I have talked about this in the past itself. So stable coins are a passive bid for treasuries, in that if the United States keeps engaging with the global economy and sending dollars out, and even if they get dollars back in and they send dollars back out, the more that they circulate on the outside, the more you have a passive buying of treasuries that doesn't fold. As Kane said, the word fold, meaning that it would shrink in size, but as long as it doesn't, the treasuries keep rolling. And then and as you keep trading it can keep growing. Yeah.
And I think a point there that's really important is that you can easily argue in the US we have a spending problem. In fairness, if you just look at it like a personal balance sheet, there's probably a lot of just a lot of parts of the government in the US spending that we could probably do away with and be okay. And so if we're in this environment in the Eurodollar system where we're constantly rolling, and increasing the amount of issuance to account for that excess spending that's probably unnecessary, but then the other excess spending that we don't really know about in the Eurodollar system, with the stable coins, that supply can just keep circulating and you can get a better handle on, okay, if we kind of do a little bit of budgeting and we get our spending a little bit more under control and we don't have that excess effectively leverage from the outside, then you could taper down issuance so that that debt becomes more manageable. And that, in a Triffin's world, in past economic systems, has not been possible. It's the famous whatever 200% of GDP or 250 to GDP that essentially you see empires, economies, and economic systems just completely collapse. And I think that's one point that it was a different framing, but Paul Tudor Jones on the O'Shaughnessy podcast recently, where he talked about, hey, I think everything's great in the US. I'm excited about all the AI, but I'm a little bit concerned because we're 200% or so market cap to GDP, which is effectively the Buffett indicator. And that's the same problem that Richard Warner points out with Japan. When that liquidity gets so far and above GDP, you've got a lot of unproductive use of capital relative to the productive. So I think it's interesting that I kind of believe stablecoins can help solve all that for a lot of different reasons.
I'm not sure that, well, nothing is that easy. That's what I'll say. Nothing is that easy. But on your point with regard to the debt and the market cap relative to GDP, couple bottom lines. GDP has to grow. And another point that I'll make, and this is an opinion that I have, is that the share of capital going to productive uses today versus yesterday, it's going the right way.
Mm-hmm.
And I mean, if that can continue, then I'm very bullish on the math starting to work out. Now, politics are very difficult, and we do have a spending problem, but it is fixed. It can't go down. So GDP has to go up. You
Right.
can't go down. And because United States has to keep the social safety net that it has, it can't eliminate social safety net. And because it has to be competitive, it has to be competitive with itself, first of all. It has to look itself in the eye and see what is there. Now, if you don't have a replacement for any of it, don't take it away. So interestingly, Trump accounts, the chatter is that Trump accounts are a replacement for Social Security, but that technically is going to take at least 47 years to complete the first cycle. So that's not a solution for that. And you don't have a solution for healthcare either. So yes, on Medicare, on Social Security, and on defense, you can't go down.
Mm-hmm.
And so GDP has to go up if you are to survive. And interest rates also have to be under control. So that's the battle between, is it going to be repression, or is it going to be representative of appropriate deflation, or is it not going to be and cause a real crisis if inflation becomes the problem? And at what level? Say one last thing, Kane. We talked about inflation. At what level does it become binary that this is too much, but this is not? We according to the stock market, we haven't come much close to that limit, I don't think. That by itself is phenomenally interesting information. I wanted to make that one last point on inflation.
Yeah, and I think that history will kind of prove that out. Maybe not from the inflation standpoint, but if you think about rates, and then rates generally telling you the level of inflation, right? And so, if you go to Milton Friedman's, high rates tell you that the economy is functioning well. Low rates tell you that it's not functioning well. And so I looked back at rates going back 200 years, maybe a year or so ago. Most of the time in that period, interest rates were between 6 to 9%. It's only which would imply that inflation was relatively high. I mean, I have no idea what level because nobody tracked it, but
6 to 9. I mean,
yeah,
why not?
it's a function of that's kind of the floor, right? Um, so it could be higher, it could be lower. But in modern times, kind of more in the kind of post World War One, World War II era, post Bretton Woods era, rates were significantly lower. And then in very modern times, kind of post 2000, they're effectively sub 4. So it kind of explains the problem, which is the rate side, but also kind of fits to your narrative that like stocks agree with high interest rates. And a common saying is that high rates are bad for stocks. In an inflationary environment, high rates are good for stocks because it becomes the hurdle rate that investors need to account for that inflation. And so, I kind of think regardless of the political rhetoric, higher for longer, though more painful, would be better for a system. And so my hope is that through these new tools, maybe we figure out, as you talked about a good bit about how it can help lower the SOFR rates to get that spending in check. And again, as people kind of get angry at Trump, which can be easy. But I think his use of tariffs match what Alexander Hamilton did, what McKinley did, which were times that are more like today. They were just way back in the 1800s, and we don't know what those are. Then when tariffs were used wrong in the 30s. And so they're a protective mechanism to get that GDP, to get that productive use of capital that we're seeing deployed into, you and I have talked about it a number of times, the chips sector specifically, because that is the technology going into the future that will help us become productive again. Because from a labor productivity standpoint, we're some of the most unproductive that we've been in America, going back since the 1800s. And so I think when you look at it in that perspective, and you take off, I'm on this team or that team, but I'm on Team America. All these things, if we can just kind of push through these tools, as you mentioned, the stablecoin is a tool, but all these tools can help us get away from the unproductive stuff and to the productive things that run GDP hot. That maybe we do end up figuring out how to work with low rates, but we end up in a higher rate world that doesn't feel as painful.
Yes, and you have helped me see the credit for tech exchange and turning this massive treasury market into funding for factory build outs, semiconductor related, energy related, that the United States can export its value add to the rest of the world, keeping everything built here, mostly employed here, domiciled here with the treasury funding. And that's why the Michael, every component of my paper, the exporting of the stable coin in the trade to the outside of the country is it's it it's the path to get it there. If you can't do that, then you can't start the network effect.
Yep, I agree with that. And I think what's interesting or important is he walks through. I forgot the podcast, but we both listened to it. Basically, how Russia did it. They were the inverse. Like we're too much of a consumer today, and we need more state directed capital, which from an American standpoint is very communistic in terms, or it might look more like China, or it might look more like where Russia was in the past. But to right the ship, America kind of needs that direction to get that productivity up, which is for the better part of the last year or two, what we have seen in the chip space with the Genesis project, with all of the physics of the quantum and the AI race, because we have to figure out how to balance the outsource and onshoring of those things so that we're not left, answering to somebody else.
Yes, it was Michael Every on Grant Williams' podcast, and he talks about this concept of the reverse perestroika.
Mhm.
And this was a Soviet technique to free up the Soviet economy and to get all these non-fungible versions of the ruble more fungible with each other. Every is arguing that the United States makes the dollar less fungible. Perhaps, I'm not sure if he discussed it then, but from a Eurodollar perspective. But really, it's this idea that the United States can use the stablecoin concept to direct capital flows to its advantage. And that was a very interesting and illuminating episode for me. And while I can't really speak on should the United States be pursuing capital controls as they're labeled capital controls today, that doesn't change the fact that trying to direct new forms of capital out into the world and then have them circulate it and potentially have them send it back to the United States for some use, and we guardrail that type of capital flow or advantage it in some way, it's really down the line. That's why, my idea is quite speculative and long
Mhm.
term in thinking, but I think if the United States can entertain exporting stable coins into the global sphere, it's a positive it's a positive thing for the country for these two reasons: one, governance, and two, profits.
And I think those are very important. And if we kind of wrap it up, I mean, I appreciate your paper. I thought it was a great job. But if you look at economic systems, I think capital controls gets a dirty word, or it is a dirty word. But capital controls are really the only thing that balance out the imbalance that happens when you let too much liquidity flow around. And whether it's China putting capital controls with the yuan peg, or the US creating capital controls by trying to use stablecoins to fix the treasury market, or the issues that exist in the treasury market. They're a natural way to reset balance and get everything going back again, rather than kind of living in this bifurcated world.
Yes, capital controls, it is a dirty word, but like you said, you mentioned Triffin's dilemma and the buildup of treasuries abroad, and the imbalance of trade itself today, which, call it sustainable or unsustainable, it's left the United States with a gap.
Hmm.
And that gap is now being filled. And it's imperative that it's filled from a longevity perspective and from a competitive perspective now. So you don't really have a choice. And a lot of these topics are not, I hope that they're not political in nature. And honestly doesn't seem to be, because while Trump is taking 3 victory laps for Intel, he didn't start that. He didn't
Right.
start up,
Right.
and
Biden,
Biden did.
yeah, had the
And
big program.
I like to lean into that detail here, because it can't be political that the United States needs a hedge from Taiwan. It
Hmm.
can't. It absolutely cannot be.
I think um, I would agree with that point. I think the only thing I would add is if you look back over the last 30 to 50 years, the political nature of what has become is what got us here. And if we want to get out, we have to unwind that. It's not the Red Sox versus the Yankees.
No.
It's everybody's on Team America. And so
A-
unwinding that is as important as the stablecoins tool.
yeah, and A16Z is one of the largest political donors this cycle, and by the way, Elon, I I believe, is going to leapfrog Intel, and Intel is basically going to provide the trampoline for Elon on a silver platter, because the government owns 10% of it now.
Mm-hmm.
It's basically asking, or let's not, I don't want to say whether it's Elon or the government or Intel that's doing this, but what will end up happening is that the factory that Elon Musk is going to build in Texas is going to be built with decades of Intel's R&D, and he will leapfrog them, and he will do it in only a couple years, and the country will never be the same. But guess what, Kane? It was, they say it was written. It's already written. And this is where a lot of my optimism that the nominal GDP can get there comes from.
No, that's a great point. I think I agree. I think when there's so much doom and gloom to look at, I spend time in that world. I see that world. Um, and it's there. It's hard not to look at it. But I think the structures that we're seeing, the tools and the technology that we're seeing to build these new monetary tech stacks are the thing that's most bullish to me. And it is not just a Bitcoin or an AI, but it's like how all that stable coins, how all that integrates together to write. I think I kind of look at it as you have the opportunity, if you got a beating heart and it's having a heart attack because you've got a clogged artery, you have the ability to go put a stent in to get that blood flowing again and to save the heart. And so I don't think for 20 years or so I mean, as you mentioned, thinking about it, working on it in the background, but in the foreground, that there was that idea that you could solve this problem. And I think now with the technology that we should be able to.
So I know I'll say, sorry, one last thing, Kane. Um, I got my eye on the time. I apologize. Uh, I know that you're a Napier fan,
Mhm.
and he says something that, whether or not you agree with it, there's another truth. So I'm going to say both of them. Napier says that Paul Volcker called it the unsystem, and meaning that they were in the same room, and that was what Volcker called it to Napier, that we are in an unsystem, which was the post WTO China uh, pegged to the dollar unofficially, but that's why it's the
Yeah.
unsystem is official. So that's what he called it. And I think that's a great framework. I think that Napier is an important historian, so people should look up Russell Napier. The That's not my thought, that's his. Mine is that, and this is associated with what Napier talks about, is that when China entered the World Trade Organization and drove that interest rate lower through a combination of overproduction, exporting deflation, cheap, dumping, all of that, currency manipulation, importing, I shouldn't say importing, but moving labor from rural to urban within China itself, like the greatest urbanization that the world has ever seen in population terms. All of that that's not happening again, and it's not continuing to go that way. So whether the unsystem is over, or that China bid on rates going lower and basically global deflation, that's over and ended several years ago. So people can put that in context with the COVID supply chain breakdown. And then what we're talking about today is that you have to find a way to move forward.
Yeah. Yeah. I agree totally with that. I mean, I think where, as in any case, doesn't matter if you're doing sports, education, when you take your eye off the ball, it doesn't show up day 2. It doesn't show up month 3. It shows up a year later when you realize I'm behind the crowd. And I think that's, in my opinion, what happened to the U.S. They took their eye off the ball with China running the BRI, Belt and Roads Initiative, around 2013. They bought up all the supply chains. They bought up all the resource relationships. And effectively, with supply chains, cheap goods, and a yuan peg, which was the unsystem, I think we screamed about it for 20 years to try to get them to take it off. They wouldn't, because that was their capital control that ultimately allowed them to control global liquidity more so than the Fed. And so you had that, you had the Eurodollar system as well. And finally, kind of that moment where, it's, hey, you got to wake up and do something, was 2020, because we were very much in a political war, a financial war, and all those things came to roost. And China effectively said, we need a bigger seat, or we'll just turn all this off. And so then that pushed forward to the U.S. having to kind of rethink a lot of this stuff. And I think in those painful moments, you come up with good solutions. And I think these things are pretty good. I hope that they work, and I think that they'll work. So that's my view of the unsystem. It was definitely there, but it was being ignored.
Absolutely. And we'll see what the US-China alliance, friendship, trade relationship, codependence, as well as economic rivalry and defense rivalry turns into.
Yeah, I mean, I think the last couple of maybe it was 6 months ago or so, I think Trump said that he and Xi met and they agreed to effectively play nice, but not compete. And I think that's what you want, or that was kind of my takeaway from it. And I don't get too far into the all the headlines and following the government, this and that. But I think that's a win if China and the U.S. can play nice and compete rather than stop competing, because we'll get the rest of us, the people, will get better monetary tools, we'll get better goods and products. So, well, that's all I had. I appreciate you coming on today. And I don't know if you want to tell listeners where they can go find your stuff, find this paper, or anything else you want to share with them. You have a great research platform, Bitcoin liquidity flows. It's the Bitcoin layer. I'll let you give the infomercial, but.
Thanks, Kane. Appreciate it. Well, the bitcoinlayer.substack.com, we have a free macro newsletter. And like Kane was saying, we have this incredible new research tool that people can check out and start for free.
Built all with Claude and AI, all the coding.
Absolutely. And we have our own proprietary metrics in there, which makes it special. It's our analysis and our quantitative framework that people can just follow right along with. And we also have a bunch of charts that maybe you can get elsewhere on the internet from here and there, but a ton of incredible charts all in one place. We also have our own Bitcoin node hooked up to the research platform. So a lot of on-chain data that comes right from the chain itself. And yes, Claude Code at the center of the action.
Awesome. Well, Nik, thanks for coming on today.
Thanks, Kane. Take care.